why am I investing in Calgary? Why am I buying properties in Calgary? And you saw me running around a little bit. I was actually just in the process of buying another one, something that came across my desk last night, a quick opportunity. So I am still actively buying real estate in Calgary. So let's find out why. Well, first of all, who's this guy on the screen? My name's Alex Wilson. I'm owner and broker of record at Remax Wealth Builders Real Estate. Been selling real estate in Toronto for over 11 years. Number one Remax agent in Ontario for individual transactions in 2019. 2020 stats aren't out yet. Number 25 Remax agent of the world, in Canada, number 80 in the world. I've been inducted in the Remax Hall of Fame and awarded the Remax Lifetime Achievement Award at 35. I'm currently 39, but none of that is relevant to you. That's all about selling real estate. But where the true passion is and why we're here today is to talk about investing. And that's where I've had a great track run. So I've turned a deposit of $39,300 into a $14 million portfolio, which includes 14 condos, a High Park triplex, and an apartment building in Hamilton. Now, we start off these presentations always with, I go kind of a little bit in depth into my portfolio. There's the Kyle slide, not here, taking care of his baby and his wife. Again, he just had his first child yesterday. So I am solo today. So we take a deep dive into my portfolio always to start, because I want to show people quickly why you're making these investments and the journey that we're going on. So real estate won't provide you instant gratification. It's not the stock market. But what we show you here is that it does have the ability to generate substantial wealth over time. So these are all the properties I own, the current market value of them, and then the value of them in 30 years. Why I look over 30 years? 30 years is when all the mortgages will be paid off. I put 30-year mortgages on them. They get amortized over the 30 years. And throughout that whole period, there's someone else paying down the mortgage. This is very the simplest form to look at it, not factoring in excess cash flows, anything like that. Let's just pay attention to what will happen in 30 years once the portfolio is paid off. So I do a simple 3% compounded annually valuation. So I just factor in, if all these properties are going to go up 3% per year, what's their value in 30 years? So I get $36 million. Now, my background is in economics and finance, and you've been actually hearing the word inflation a lot these days. So very important to recognize that the power of your dollar today will be less than the power of your dollar tomorrow. So I do put that $36 million. I'm like, well, what's that in today's purchasing power? Well, that's nearly $21 million in today's purchasing power. So that means in 30 years, my whole portfolio in today's dollars will be worth 21 million. So just with these small actions that you take today, you can build that substantial wealth into the future. Now, I've done many videos on this, but recently I took it to another level. I said, well, that's nice that it's worth 21 million, but what does that actually mean? That means nothing. When I in 30 years, so when I'm 69, I want to be living off of this. What kind of cash flow will this provide me? So I'm like, well, let's think of this if it was a pension plan. So I took the purchasing power of the portfolio, or the portfolio value in today's purchasing power, and then I applied a simple 5% ROI. Typically, I know people look for even a higher ROI than that on their total portfolio, but I said, let's just do a simple 5% ROI. So that if I applied a 5% return on that investment, that means I am generating an income of over $1 million per year. But again, that nasty inflation word, I do want to reinvest some of that. So I reinvest 2% back of that into the portfolio so it maintains its valuation. So that'll provide me with an income of nearly $625,000 a year to live on. I don't even need that much to live on when I'm going to be in my late 60s. So it was really mind-blowing for me to do this. And I'm like, wow, I've actually created my portfolio, my own pension fund that I can live off of in the future and adjust it to pay pay to me. Also, this is something that could be transferred to my future generation. So I'm building that generational wealth in here. And it was something that when I actually sat down and ran the numbers on what kind of cash flow can this provide me, it really ended up being a mind-blowing exercise. And you may be going over there, well, wow, I can't build a $14 million portfolio. Well, it's not about building a $14 million portfolio. The numbers that I ended up coming out with were well exceed the income that will require in the future. But I took it down to a simple bite-sized steps of $1 million increments. So if you were to have something that's $1 million right now, again, this is the beauty of leverage. You don't need to have $1 million of your cash in there. You can have a mortgage on the property. So you'll have 20% of your money in there. You would have 200,000 in there, and then 800 of that would be paid off by tenants living in the property. So then you look at the valuation in 30 years, you adjust it for inflation. So if you had $1 million property today, you could actually have a yearly payout of $42,000 in 30 years. That's inflation adjusted. Or if you didn't care about inflation, $70,000 per year in inflation adjusted dollars. If we just build that to a $2 million portfolio, that gives you 140 and 84,000, 3 million, 210 and 126. So these are small bite-sized steps that anyone on this call can do. I started out this way when I started investing in 2012. Nothing special for me. I'm from a small town in Northern Ontario and just made my way to the big city. Anyone on this call can do this as well. It's about taking action today, these small steps, and it's going to build you substantial wealth for yourself in the future and for your family in the future as well. So that brings us into now why we're all here. Why Calgary? Well, when I first invested in Toronto, I bought in a condo building called Carnaby was the first condo I bought, and I also bought in Canary, but that was down the road. Carnaby, which is the building at Gladstone and Queen. And I bought that building for that unit for somewhere in the 260s. It went up over time. And that's how I started building my portfolio. Well, I can't do that anymore in Toronto. I'm looking if that unit, which was a 1-bedroom, 500 square feet with parking and locker in downtown, that unit today would be over $700,000 in regards to if I'm buying that pre-construction. So how do people start off and how do people add to their portfolio? Toronto will always evaluate it's blue chip, but for those growth opportunities that provide cash flow, because that's how I built my portfolio initially, was through cash flow. What can you do? Well, in 2019, that's when Calgary came across my desk, and someone's like, "Oh, you should really consider Calgary." I'm like, "Well, why?" So the opportunities we're looking at are 5% down, and they came with leasebacks from the builder, which were cash flow positive. So I'm like, "Well, that's interesting, but what's the upside on this for me?" So we started looking and researching into why we should be buying properties in Calgary. So Calgary itself, it's the #1 most livable city in North America for the last 2 consecutive years. 4th most livable city in the world for stability of healthcare, culture, education, infrastructure. Top 5 on the Economist Intelligence Unit's Global Livability Index. It's located in the foothills of the Canadian Rockies. Loads of green space, tons of green space in the city. And it has the 2nd lowest cost of living and the 9th lowest cost of living for all North American cities. So 2nd lowest cost of living for Canadian cities and 9th lowest cost of living for all of Canada. So I'm like, well, that sounds all pretty good. And considering where we're looking at COVID and where people are evaluating their situation, where do I actually want to live? Do I like the place where I live? Well, then Calgary also offers the sunniest city in Canada with over 2,300 sun-filled hours, the most extensive outdoor pathway for getting outside because everyone wants to go outside these days. It's amazing when I'm out of my neighborhood and it's a terrible day out. And if it just stopped raining or it's been really, really cold, I still see people all over the streets because we're all dying to get out of our houses. If it was a regular winter, everyone would still be bundled up in their houses. But I'm constantly seeing people out in the street. So what Calgary has to offer is this great sunny city with lots of outdoor space and green space, and that's contributed to their the health of their inhabitants. They're ranked the second healthiest for lifestyle in Canada, and life satisfaction of all major Canadian cities. So again, if I'm looking at on a list, well, where do I want to live? These are all things that I'd be looking for what an environment in a city can have to offer me. And then when I leave the city, well, that's where I get into Banff National Park with over 200 hiking trails, only an hour and a half away. And a true hour and a half away. It's not like you're going to Muskoka where you have to get in your car at 4 in the morning just to be a 2-hour drive away from there. This is a true hour and a half drive away. They don't have the same traffic congestion that we do. And 5 world-class ski resorts all at your doorstep. So I'm like, well, this place looks great when I looked at the environment and the infrastructure it has to offer. But that's not why we just invest in the city. We need to look deeper into the statistics of the city, which we did next. So I do have to fix this slide. The actual net population growth in 2020 was actually 29,000. So the population of Calgary is growing. So we always look for a positive population growth. The reason for that is we're in the business of selling roofs over heads. So that means we require more people moving to a location, and more people moving to a location will require more roofs over heads, and that will cause prices to go up and rents to go up. So we wanted to make sure that it had positive population growth. Then we looked at the money. Well, Calgary has the highest millionaires per capita of all the major Canadian cities. So they have money in Calgary. And they also have the highest wages and salaries per employee in the country. They also have the lowest taxes from an individual and corporate standpoint as well. So that means their spending dollars go further as well. There's no provincial sales tax in Alberta, and they also have the lowest income tax rates as well. So we know that in the past and present that the population of Calgary is growing, and we know that there are the salaries and the wealth there to pay for the properties and to pay the rents for the properties. What's happening in the future? Well, this is where I got really excited when I was doing my digging. So this is from Statistics Canada. Alberta will lead population growth over the next 22 years, according to Statistics Canada projections. Alberta's population is set to increase by 48% and will be larger than BC by 2043 versus Ontario's population, which is set to increase by only 24%. And what's cool, Alberta is going to grow at double the pace of Ontario, but B, the net gain of Alberta to BC is over 1 million people. So currently, today, British Columbia has 600,000 more people. In 22 years, Alberta will have more than 400,000 more people than BC, which will be a swing of 1 million people. So that's happening over the next 22 years, which we all know isn't really that long away. So we saw that there's going to be substantial growth in population. That means that there'll be require substantial growth in the roofs required for those people to live in. And then we look again. Money. We talked about the per capita millionaires. We talked about the wages in Calgary being the highest in Canada. Well, what about the economic output? Look at your big three up top: Toronto, Montreal, Vancouver. In regards to the economic output that they provide in regards to GDP. Number 4 on that list is Calgary. So Calgary is 4th in regards to economic output for Canadian cities. The economy of Calgary is greater than the economy of provinces. It's greater than the province of Saskatchewan. It's greater than the province of Manitoba. So it has significant economic clout compared to the rest of Canada. And it's the fourth largest in regards to after the big three of Toronto, Montreal, Vancouver. So it's got the money there and the economic infrastructure as well. And then when we talk about money, it's all great that I came to all these conclusions. But part of it is me riding off of someone else's coattails. So Minto, who we've done a lot of work with out in Calgary, they are a Ottawa and Toronto-based developer. They have over 1,100 employees. They're publicly traded on the Toronto Stock Exchange on their REIT, which they have over $4 billion of assets under management. They've been around for 60 plus years. So when I look at Minto, who started in Ottawa, now does significant work also in the Greater Toronto area, also does work in Florida. Now, recently they've moved into the Calgary market. So they have 1,100 employees, publicly traded with $4 billion worth of assets. They have a whole bunch of analysts that say that, hey guys, we should make investments in Calgary. We see some great opportunity there. And because they're also publicly traded, they're under great scrutiny as well in regards to their investment practices. If they make mistakes, they will be punished on the stock market as well. So their analysts do a lot of work and do a lot of due diligence. So when I saw Minto investing there, I'm like, okay, they got something going on. They know something. They see value there. And I did my own research, but because I have this large company that's also going there, I'm like, this is a good idea for me to go out there as well. So why is Alex going out there? What's the reason? Well, if we look at the old adage, buy low, sell high, we got a nice little picture of Warren Buffett here. Two reasons I have that. A, he talks about buying low, selling high, but B, this actual specific article, which he made this investment last year during COVID. He made an investment, his first investment in oil and gas in over 10 years. He bought a pipeline for $9.7 billion. Following that rationale of buying low, selling high, that means you see upside in the asset that you're investing in. And how I relate that to the Calgary market, new condo sales prices have dropped 21% since 2017. So this is a buy low opportunity that I saw. And it's not like we're buying at the top of the market. We want to buy at the bottom of the market. So that's why I started seriously looking at Calgary, because it is in the low portion. And as we continue on the presentation, I saw the prospects for it to rebound from its current pricing position. And then Trans Mountain Pipeline. So this is a huge positive. So we look at the Keystone, which hit the airlines recently. Hit the airwaves recently, and I get this question a lot. So if you watch any of my past videos, never talk about Keystone once. Why didn't I talk about Keystone? Well, Keystone was already canceled once in 2015. And when I did some more research, we didn't need Keystone. Keystone was just going to provide excess capacity. So XL, why it didn't matter is when it was originally canceled in 2015, I'll back this up a little bit. Our imports to the US was 3.8 million barrels of oil last year, and that was a record high. Our capacity to import oil to the US is 4 million barrels. Demand is expected to peak to either 4.2 to 4.5 million barrels of oil by 2025. Because Keystone was, so A, we have enough capacity for their current demands, and B, because Keystone was already canceled once in 2015, contingency measures were taken into place, and in other areas of the country, pipelines capacity was expanded. So by the time that the Americans' demands for oil hit 4.2 to 4.5, we'll have the capacity is being built into the system to accommodate that need. So Keystone was only going to provide excess capacity. So it wasn't actually going to help the Canadian oil sector, because the Americans are actually our sole source, for the most part, customer for oil. And when you saw during the COVID crisis, the peak of it, Alberta oil was selling for 50% less than Texas oil, because we can't get our oil, because Alberta's landlocked. It's not easy for us to get our oil to other markets. So we rely on the American market to sell our oil to. They're our largest customer. And because of this, and because our inability diversify our customer base for oil. This causes Alberta oil to set at a discount compared to the worldwide oil price at certain periods. So Alberta oil doesn't need worldwide prices to go up, though that certainly does help. They just need to get distribution increased to get closer to the current oil prices. And when we look at the pipeline, the Trans Mountain pipeline, that's what Trans Mountain provides. Trans Mountain is getting the oil out of Alberta and getting it to a port city in Vancouver, then will allow us to get our oil out to the international markets. So that's what the important thing is. So it's all about the distribution, increasing distribution to different markets outside of the US, which will help Alberta oil. And that's Trans Mountain Pipeline, which is all on Canadian soil, which as Canadians, we all own because the federal government purchased it. And it's a matter of national strategic importance. And when Trans Mountain is completed in 2023, and will triple capacity along that line and will increase Canadian exports of oil by 14%. So Trans Mountain Pipeline is the one that matters. Keystone doesn't matter at all to you. Trans Mountain is the important one, and that's the one that is being completed. And again, that will be a positive for the Calgary economy when it comes online in 2023. So we talked about that distribution and diversification, but continuing on the the diversification trend is, what other economic activity is happening in Calgary? So you need to look at you need to look at oil and gas as the backbone of the Calgary and Alberta markets. So previously you would have looked at it as the growth area, but if you switch your perspective and look at it as the backbone, things start to get really, really exciting. So downtown Calgary, as it exists today, it had a building boom at the turn of the last decade, when oil was around the $100 a barrel mark, and they built downtown. The newest buildings that came online in downtown Calgary were all based on $100 oil. Well, that didn't happen. The bottom fell out of oil, and we're now sitting. This morning I think it was $60.52 is what the barrel of oil was at. But because of that, you had this whole great infrastructure being built. And what has happened now is you have low cost office space, because the vacancy rate in office space in Calgary is 27%. Not a bad thing. It was just overbuilt. And this is what will allow diversification in the job market to happen. So Calgary ranked in the global top 10 most attractive cities for workers. So it's a great place where workers want to live. And Calgary also has the highest proportion of STEM graduates of major Canadian cities, degrees and programs in science, technology, engineering, and mathematics. All the degrees you need for a thriving technology boom. And the added fact is that they have affordable office space for these companies to start to thrive. So Calgary is home to 435 technology companies. 3/4 of these are startups. Again, what's important to a startup? Low cost environment. So there are more than 2,000 open tech jobs in the city and a record 44,500 Calgarians working in tech right now. And let's look at their significant low cost of doing business. So as tech has grown, so has the number of tech companies that are moving into the downtown, in part thanks to the affordability office space down there. So Calgary's office space, an average cost is $17.50 per square foot. It's 23% more expensive in Edmonton, over 100% more in Toronto, and over 150% more in Vancouver. So again, for these startups, for these small to medium-sized companies, you have this extremely low-cost environment that you can do work out of, not only from the office space perspective, but also from a corporate tax level as well. So when you're these smaller companies, competing on a cost basis is very, very important to you. And that's where we start to get exciting. So I'm not just saying these things are actually happening. So what we've had now is we're starting to see some of these startups come to to fruition, and they're hitting unicorn status. So what unicorn status means is that the company has hit $1 billion valuation. So Benivity is the latest unicorn to hit in Calgary. And if we look at the date here, that's December 4th, 2020. This is happening as we speak. That's just 2 months ago. No, 3 months ago, sorry. And if we look into that, this wasn't the first one. This was the latest one. So we look at Solium Capital was sold to Morgan Stanley for $1.1 billion in 2019, and there was $1 billion deal between Calgary-based medical research firm Parvus Therapeutics and San Francisco-based biotechnology company Genentech that same year. So we got 3 unicorns that just recently occurred in the Calgary market. And where things get exciting is that's when the spin-off effect happens. And that's when Calgary starts being put on the map as a technology hotbed for new emerging companies. So more investors take notice of this in the area, and more venture funds will start scouring the technology market in Calgary to look at where our next unicorn is, where's our next investment opportunity. Plus, the founders of these original unicorn companies, well, they're flush with capital now, and they need to invest in somewhere. And what market do they know better than their own market? And their friends in the startup world that haven't hit it like them, they're like, oh, I know Brian or Sanjeev over there. They got something great going on. They just need a little capital invested in them and some oversight from me. I'm going to make an investment of them. And then the spin-off effect happens and things start snowballing. And that's where we see it when it comes to attracting investment capital and high value deals to its sector. Calgary is now punching above its weight. She said that Benivity and the Solium deal will ultimately help to drive more investment, not only because the founders and shareholders of these companies now have the capital to reinvest, but because of their high profile nature will help to open the eyes of others with deep pockets to what's going on in the technology space in Calgary. So this is happening real time. And these companies are growing. So these are real life examples of companies growing. So you have Simon. It had fewer than 20 employees in the spring of 2020. Today, they have more than 200 employees, and they're moving into 79,000 square feet and looking to hire an additional 200 to 300 people in 2021. Halcyon outgrew its cramped office space in Blackfoot Industrial Park last year, gone from 3 staff 5 years ago to 68 employees now. Plans to have 150 employees by the end of 2021. Just signed a lease downtown for 20,000 square feet in the Millennium Tower. LodgeLink, they'll require 300 new technology-based jobs over the next 5 years in Calgary, and they require another 50,000 square feet of office space in Calgary. And they're also going to be hiring another 300 non-technology-based jobs. So these companies are coming, and they are taking up space downtown, and they are growing substantially and exponentially. And it's not just local homegrown companies. You have international companies that are coming in now. So CloudExa is ESQ's new Canadian subsidiary. They have headquartered offices in Silicon Valley, as well as offices in India, Mexico, Singapore, and the United Kingdom. They looked all over Canada, and they decided to make Calgary their location for their Canadian head office. As well, there was also a recent case where, and I'll include the article in the recap, because we sent a recap email out, where we see now offices moving from other Canadian jurisdictions to the Calgary market. And how do I know that this will continue? Well, because it's already happening somewhere else in the world. And we're seeing an exodus of companies from Silicon Valley, so California, to Texas. Why is this happening? Well, they're fleeing high taxes. And a lot of this has similarities to Alberta and let's say Vancouver, or Alberta and Toronto. So they're fleeing high taxes. Well, Alberta is the lowest corporate tax rate in Canada. There's no provincial sales tax in Alberta, and there's no land transfer tax or development charges in Alberta. So they have the most favorable tax environment in Canada. Expensive housing. Well, housing is incredibly expensive, more expensive in California even than it is in Vancouver and Toronto. Well, Calgary has the lowest cost of living, the second lowest cost of living at all major Canadian cities, and the ninth lowest in North America. So they actually have the affordable housing, so they can provide. The salary of a Calgarian goes much farther than the salary of a Torontonian. So companies, by moving to Calgary, can provide a higher standard of living to their employees without increasing their paycheck. So a higher satisfaction to their actual employees that are working. And also from a government regulation standpoint, the Alberta government has been proactive in regards to their COVID response. They've already signed a $10 billion stimulus package to jumpstart the economy. They've already cut their corporate tax rate, which has put them the lowest corporate tax in Canada. They're also investing in things like the $1.75 million commitment to the Alberta Enterprise Corp for innovation. So they're making investments to homegrown, innovate, but also attract other companies to come in as well. There's no rent controls in Alberta. It's a very, very capitalist province. And some of the examples of companies that are moving from California to Texas, you may have heard of before. So you got Hewlett-Packard, massive. They're not moving all these employees, but this just gives everyone a perspective how large these companies are. Hewlett-Packard is moving their head office from California to Texas. Oracle, Tesla, Elon Musk has moved his own personal residence to Texas. Dropbox, the CEO of Dropbox, same thing, has moved their personal residence to Texas. And why I feel confident about Alberta's ability to invest and continue to attract these companies and provide a great environment for these companies to grow and thrive is they have the lowest net financial debt in Canada. So going back to that backbone comment, oil and gas was the backbone of the Alberta economy. Their net financial debt per capita is the lowest in Canada. In Ontario, it's nearly $19,000 per individual. In Alberta, it's under $2,500. The Canadian average is over $10,000. So they have the capacity to invest, to run up a deficit in the province because they have the savings capacity to do this. Now, will their debt per capita grow the fastest in Canada? It will, but that's because they have the capacity to make those investments in these various fields to have the lowest corporate tax rate, to attract these new companies to come in. So when I saw this, I'm like, this got me really excited because they have the capacity now to invest. And I include this slide as well just to show the diversification of the Calgary economy, where oil and gas mixed in with forestry, fishing, mining, and quarry is only 6.5% of the workforce in the Calgary environment. So it's not like it's a large size of the workforce. And a lot of the layoffs in the oil and gas has already happened. That happened when the price of oil dropped down to its current levels. So all those efficiencies, all those layoffs, that already happened. You may still see some come through, but these companies are already laid off and did the cost savings that have already been required of them. So there will be no more massive layoffs in Calgary because the culling of the herd, as they say, has already happened. And now that space is being filled again by new technology companies. And again, we have the Trans Mountain Pipeline, which will help the distribution of oil. That'll be occurring in 2023. So Calgary is typically a boom and bust economy. Historically, that's what it is. And what we see is they're coming off of their bust cycle and they're going to be heading to boom times now. And we're starting to see that in the market. We're seeing record level transactions happening in the Calgary market. And I was talking to one of my local realtor contacts in Calgary, and where are these people coming from? Well, they're coming from Toronto and Vancouver. There are people that are relocating from our major cities that aren't required to live in Toronto or Vancouver because of their work, and they've reevaluated. And they saw the incredible cost of living savings by living in Alberta, where today in the news, literally today in the news, the average price of a Toronto property has now eclipsed $1 million. That's across all properties, condos and freehold houses. The average cost of them is now over $1 million. That is incredibly unaffordable for individuals. So where I can get a condo in Calgary from the low 300s starting in the suburban areas in the low 200s, that's where there's huge opportunity. And when we're making these investments are able to secure units for only 5% down. These are pre-construction units. Our opportunities have the ability to assign. You get a 2-year rental guarantee, including full property management. It's actually leased back by the builder. So from day one, the builder is going to lease back the unit from you at a set rent, set today. So you get that peace of mind, which will also include the full property management. Again, from taxes, there are no development charges in Calgary. There are no land transfer taxes in Calgary or Alberta. So this is a $40,000 plus savings alone, just in regards to when you close on a property compared to a Toronto property. And all units are cash flow positive with the rental guarantee. There again, is also no provincial sales tax. So that's a 8% savings just right there, because you don't have that consumption tax, that PST, which is combined with GST here, which makes you a 13% HST. There is no PST, provincial sales tax, in Alberta. So I want to give I started giving the examples of how the leaseback works. So again, we're always very transparent. I like to show people what I do so they can follow my money. And I'm not telling them to do things that I'm not doing myself. So the first property I bought in 2019 was at Era Condos. I bought a 2-bedroom with parking and locker for just under $390,000. The lease back on that was 6% divided by 12, so that they are guaranteeing me a rent of $1,855 per month for the first 2 years I own it. The mortgage on that, less property tax, less maintenance fee from the lease back rent, that'll give me a cash flow of $265 per month. Incredible. Can't do that in Toronto or GTA or probably even Southern Ontario. Then I also, in 2020, I bought a unit in East Hills, which is more suburban-based location. So you can see it's about $100,000 difference when I leave the core and go to the suburbs. So I bought a condo, 2-bedroom condo with parking and lock for $270,000 there. So the lease back for that unit worked out to just under $1,500 per month. So when I subtract all my expenses, I get a monthly cash flow of $218 per month. And then when I look at my capital outlay, I'm only putting 5% down on these. Yes, when I close on the properties in 2023 and 2024, I will have to come up with the full 20% down, but my initial cash outlay is only 5%. So if I look at it, my deposit on Era was just under $20,000. So in 2 years of that property goes up $20,000. I've doubled my investment. That's an incredible return. East Hills Crossing, my deposit was under $15,000. So if in 2 years the property goes up by $15,000, again, I've over doubled my investment. So when I look at it from a capital outlay perspective, I don't need large increases in the value of the property to make it a huge return on my initial capital outlay. And then the pro investment environment there. So no rent control, no foreign buyer tax, no land transfer tax, no provincial sales tax, no development charges, and $10 billion and a $10 billion stimulus package, including reducing corporate taxes in Alberta, in Calgary. So they have a very favorable pro investment capitalist mindset in Alberta. And whenever we worked on these projects, we sold them out. So Era, we sold 180 units in 3 months, starting in November 2019. Annex sold out the investor release of 40 units in 2 months over the summer of 2020. And then East Hills Crossing, we sold out 87 units in 2 weeks in November 2020. We just completed Era 2, which was a 40-unit building, which is going beside Era. We just sold that one out last month. And our next development will be East Hills phase 2 and 3 coming up at the end of this month, beginning of April, which those units will be starting in the low 200s, so again, with 5% down and rental guarantees. So what I'm going to do is I'm going to open up the floor to any questions. As I said, my business partner, Kyle, he just had his first child last night, so he wasn't on the call. But if anyone does have any questions, I can answer in the Q&A box at the bottom. This whole thing has been recorded. Everyone will get a recap of this presentation. I'll also include some recent articles on the Calgary market and what's happened there, and also information on the next launch that's coming out. And if you do like downtown, I do have an opportunity downtown. I'll include that in the email as well. So if you do have any questions, you will be able to book a one-on-one call with me as well when the email blast goes out. We do have our first question. Thanks. How does the price per square foot between resale and pre-construction? Yeah, there's always a difference between the resale market and the pre-construction market. But we're not looking at a big price difference. So for the East Hills specifically, that is actually building a whole new community. It's a master plan community of there's 4 buildings going up, condo buildings of roughly 90 units each. And then you're going to have 300 townhomes coming there. The PSF on that, what did I work that out to? I think it was around $400, the price per square foot, including parking. And then downtown, I'm looking at PSF in the range of $500 to $600 per square foot. So if I'm looking, and if I look at the end price point difference, I'm probably on a resale market versus pre-construction market. I'm probably paying about $30,000 more versus the resale market versus the pre-construction market. Yes, great question. When's the completion date of these projects? So the ones we've currently done are all sold out. The ones that we will send the information to you on, looking at closings 2023, late 2023 into 2024. So realistically, you're probably budgeting for 2024 for the closings. Oh, there we go. Is there a fee for real estate commission on the assignment or later closing date? So the assignment fee is $1,000 to the builder. If you were to use an agent to sell the unit, then they would charge their own commission fee out there. But the builder charge is hey. We just talked earlier. The assignment fee is $1,000. Now, anyone that's watching my videos in depth knows I don't like assignments. I think assignments are great to potential for investment, that kind of thing. But in regards to for investors to base their whole philosophy on buying and then selling on assignment, I like a buy and hold strategy. So I think it's always better to buy and hold. There's always a way to close on a property. But I tell people to treat an assignment as if they need to get it out, use it as an emergency escape, in which you'll still make money, depending on when you sell. But I wouldn't use it as my investment philosophy. But again, there is an assignment clause and it's about $1,000. Best areas for pre-construction, again, focusing in on downtown or again, the East Hills development. That one there is happening in Southeast Calgary. It's right again. If you were to go there, it's just a field right now. That's why the price point is so attractive. But across the street, there's a whole RioCan complex there with a Costco, Cineplex, Odeon, Super Walmart. So it has the infrastructure there for a brand new residential community. And then you're right off of the ring, which is a highway that goes around Calgary. So you have easy transportation access to get on a highway to get anywhere in the city. Then there's also there'll be a dedicated bus line. They'll bring you right downtown Calgary in 20 minutes. The rent area, well, it's actually a lease back. So the builder is going to lease back the unit from you. And yes, it'll be a third party that manages it. So it'll be a lease back from you. So that's where the rent is guaranteed. It's guaranteed because your tenant is the builder. And there'll be a third party running the program. Yes, anyone that wants to book a time with me in the recap email, which you'll get an email, and just in case my email goes to spam, you do get a text from me as well. You'll get that, and you'll have an opportunity to book a one-on-one call with me. Love to talk to anyone about this. Oh, great question. Love this question. So someone asked, when do you need to decide if you're not taking the leaseback option? Yes, you can opt out of the leaseback option closer to completion of the building. And why would someone do that? Well, let's say the delta between let's say the leaseback amount was $1,500, just use easy math, but the market rent on the property was $2,000 per month. The delta in that is so great that you may be like, hey, you know what? I'm not going to take the leaseback option. The market is really hot on the rental side. I'm going to make arrangements to get the unit rented out on my own. You can opt out of the leaseback program 100%. The reason we negotiated the leaseback program is because a lot of our investors are either in Toronto or Vancouver. And one of the biggest objections is, well, Alex, I'm not there. So how could I take care of the property? So we provided this leaseback option to make them feel comfortable with investing in this market, because they don't need to worry about having a tenant initially in the property. Great. Looking forward to hearing from you, Jean-Claude. Yeah, again, Sergio, just going back to your question, yeah, you can get out of the leaseback right before closing on the property. So if that's something you want to do, you can do that. My investors so far are only Ontario. Is working with mortgage brokers, lenders in AB, pretty much same as Ontario. Great news is lending is national. My mortgage broker, who operates out of the GTA, is doing the mortgages out in Alberta. So it's a national environment. The same people that are lending here are lending out there. So no issues on the lending side. Jean, yes, I have something for the downtown location. I will email you that. East Hills, I don't have it yet. That's coming again at the end of the month, which is the more suburban location. But again, I'll have more details for everyone when we're done on this call. If we don't have any more questions, I'll wrap it up. Again, this recording will get out to everyone. You get it in typically about 24 hours. Again, I'll also have a summary of the two projects. One's currently launched, one's coming at the end of the month as well. Those positive news articles. This whole thing is called Going Beyond the Headlines to find out what's going on in Calgary. Sergio, yes, I have a Minto project, and I do have something else downtown. It's a different builder downtown, so I'll send you that one too. So I think I just answered that, Sergio. Just saw something about vacancy rates. Doesn't matter. It doesn't matter with the vacancy rates, because A, you have a leaseback, so you're not worried about the property for 5 years. So I don't know what the vacancy rate is going to be in 5 years. And B, it's COVID, so all vacancy rates are you can throw them out right now, because we're dealing with singularity event right now. They throws things off. So the vacancy rate doesn't matter, because A, you have a lease back. You're not worried about the property for 5 years. So the market will be different in 5 years. And B, we're dealing with a singular event right now, which is throwing vacancy rate numbers off. Great, perfect. Okay, thank you so much, guys. Looks like we're done here. I just noticed that some people are just making comments to me, thanking me, and sending me their email directly. Again, if you're signed up for this, most likely you have I have your email. Again, Sergio will. Sergio, I don't think I know we answered that question. Sergio, yes, we do have other options beyond the Minto, but we will be in touch with you all soon. Looking forward to talking with you. Okay, everyone. Talk to you later. Bye-bye.